Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. We've got Jeff Kendig here. He is the managing partner, also the founder of Bravos Capital. Jeff, thanks for being on the Talking Hedge.
Thank you for having me. Pleasure to be here.
For those who haven't heard of Bravos Capital, what is it? How did you get involved? How long have you been doing it? Tell us a little bit about yourself.
Yeah, so my background is, I have over a decade of experience in the kind of lower middle market private equity world in the mainstream industries. And then I became very interested in the hemp and cannabis industries back in 2017 is when I made my first personal investment in the space, and quickly saw the writing on the wall of how big this industry was likely to get, and how many people were kind of ignoring it or just not paying attention. And so my old firm had no interest in even discussing the topic of investing in those industries. And they have public pension fund LPs that also kind of prevent them from getting involved in vice industries. And so I ultimately had to make a decision of whether to stay in the warm, confines of the private equity ivory tower, or to leave and try and chart a path in the emerging hemp and cannabis industry. And so that's what I eventually decided to do in early 2018, and parted ways amicably with my old firm and the partners there, obviously doing, fairly non-competitive investing strategies. And so I formed Bravos Capital in spring of 2018 to focus, exclusively in these kind of two very similar but slightly different emerging industries.
It's been a wild ride. I want to ask what the difference is between investing now, post-pandemic, and what you were looking at in 2017. A lot's changed. So we're going to get there. First thing I want to ask you, though, is about just being able to pivot to stay relevant. There's been a lot of things that have happened. What advice do you have for anybody who's just now starting to look in the industry on how to get in and how to remain in?
Yeah, well, it's definitely piqued a lot of people's interest. The public markets obviously have been very positively responsive, I guess is the way I would put it, to the recent election in November. Obviously, with Democrats in the White House and in Congress and in the Senate, that presents a more, a more likely or a faster track to some kind of federal legalization. So there's obviously a lot of folks kind of getting in on the retail investment side and the public stocks. The private side seems to be where the vast majority of the companies still remain. Obviously, it's not easy to go public as a cannabis company in this country, but from my perspective, I've been always more focused on the private side. That's my kind of background in private equity, and so my thesis has always been, look, there's the public companies are going to be much more subject to the kind of volatility of the public markets, which we've now come to see over the last 12 months, that the public markets are nothing if not extremely volatile. And that creates opportunities on the investors, but it also creates a lot of risk, because it's hard to pinpoint what is the appropriate PE ratio for this particular stock, and fundamentals are starting to somewhat go out the window for the bulk of different public stocks these days. So
Have we had fundamentals in the last 10, 20 years?
they're out there. They're not getting as much news on the front page, but so I guess from my perspective, I like the idea of investing in private companies that are the up and comers that are likely to be able to go public in the next few years, or be acquired by the public companies that are filling their coffers right now with a lot of retail investment dollars. And so to me, that presents a multiple arbitrage opportunity, where the private companies will trade at multiples far below the public stocks, and therefore, if you can find some pretty solid management teams in the private sector, those will become either the next publics, or they become acquisition targets for the publics that need to find growth in other geographies.
So moving on to like what you were investing in before versus now, there's been um, a lot of drive into things that haven't worked out. People are trying to push the envelope in this new industry. Beverages, You may have thought that beverages would be a slam dunk, and yet it's one of the hardest consumer product goods to sell. You could see $1 million write-off from Aurora and a $1 billion write-off from Aurora and $3 billion write-off from Canopy. Whether or not that was all attributed to beverages, probably not, but still a huge write-off. The other things we kind of saw that maybe didn't work out from pre-pandemic investment trends were accurate dosing, with vaping especially, and some other tech plays. What are you kind of seeing the difference in with private equity pre versus post pandemic? Where were you at in 2017? Where are you at now?
Yeah, it's a fair question. So when I first entered the space, I focused primarily on the ancillary services or tech side of the cannabis space. My first investment was in a company called Trees with a Z. They're a retail POS SaaS company. And my second investment was a company called Healy, which is a B2B SaaS and telemedicine platform. So I focused initially on the ancillary side, the companies that were the proverbial picks and shovels, if you will. But then, slowly but surely made my way to the comfort zone of investing in leaf touching businesses as well. I think, back in 2017 and 2018, there was a lot of the ancillary services that just weren't yet being provided to the industry. I mean, even stuff as basic as HR. All the big payroll companies like ADP and those guys weren't interested and still aren't interested in touching the space. And so there were some very basic things from the services side of the equation that were going to be necessary for this space. And they're not the sexiest thing in the world, but they're absolutely necessities for these businesses. And those were the opportunities that kind of seemed interesting back then, a little bit more so than today. I think there's still opportunities for ancillary plays in the industry. I think the most interesting of them tend to be around the data side of the equation and how to harvest and utilize the data that comes through this very, very highly regulated industry. And because of that regulation and because of the seed to sale tracking that is obligatory in every state, there is a lot more data more readily available in this industry than there is in your typical mainstream industry. And so that data can be used to make better business decisions if you can harvest it and make sense of it properly. And so I think those kind of more data oriented plays are interesting on the ancillary side. And now that there's a lot more data available, because the industry has matured so much over the last few years, those plays are getting more interesting. That being said, I think, because more and more states are opening up now, that's where the leaf touching, opportunities arise in a state that hasn't had it legal yet and now is opening up. So as that kind of legalization trend continues to spread along, there's a lot more states that are available now for leaf touching investments than there were back in 2017.
I really like the data analytics from Headset, BDS Analytics, especially during a time right now when you're using cash, right? So you're able to. It's harder for other analytics companies without using credit card data to get what Headset's able to do in these stores for that reason. And so, looking at online ordering and things that are getting fast tracked, like delivery. Washington State, where I'm at in Seattle, we don't have delivery, but that's going to get fast tracked. Whereas, marijuana lounges are going to be put on the shelf for a while. What are some things that you've seen that might get moved up a lot faster as a result of the pandemic, from your investments? What are you kind of seeing where it's been maybe moved forward, or there's this new out of nowhere opportunity?
It's an interesting question. I mean, the thing that stands out to me the most about how the cannabis industry was impacted by the pandemic was it actually it surprised a lot of people, but most states treated cannabis retail stores as essential services because of the medical marijuana component of the industry, and that's how basically every state starts, is with a medical cannabis program of some sort. And so that was very that was very interesting. It was obviously it's very helpful for all the cannabis operators. But it did present challenges in terms of like how many people can be in the store at a time and all the usual challenges for any retail store in a pandemic. But it obviously forced the delivery side of the equation to really come to the forefront for all the states that had a delivery, kind of program in place. And so there were some, retailers that were caught a little flat-footed because, they didn't have that piece of the infrastructure fully built out or ready to kind of scale to the level that it needed to scale to in such a short period of time. So that definitely presented like a lot of opportunities for the delivery focused retail operators. And obviously in California, we can have delivery only licenses. And so that, there's obviously still some, back and forth in the court system over whether a delivery business can deliver to a county that hasn't allowed any retail stores. So there's still some conflict going on there, but generally speaking, I think delivery was like the biggest, kind of piece of the puzzle that, bore fruit during the pandemic.
So there's a lot more states that have opened up after the election in November. South Dakota, Montana, Arizona, New Jersey, and Missouri with medical. Where are you at in terms of your investment comfort? Are you looking at East Coast or West Coast? Are you looking at the FOMO on the East Coast? Or are you looking at value on the West Coast with potential distressed assets? Are you looking at both?
Yeah, kind of open to both. We completed an investment in a vertically integrated cannabis operator in the state of Michigan a little over a month ago. We think there's a big opportunity in Michigan, which is not dissimilar from opportunities in other states that are more East Coast oriented, like Massachusetts, for instance. So yeah, we're open to both sides of the country and the middle of the country. It really is just looking for interesting opportunities with really strong operators, and preferably not like for the leaf touching business. It's hard to get, it kind of those tend to be more growth stage investments, not like first round seed stage investments for us. But we're also looking on the West Coast, and right now I'm pretty deep into diligence on a California-based operator that would be basically trying to push through a roll-up strategy here in the state of California. So, there's interesting opportunities everywhere, and that's the I guess that's the good and the bad in a way. There's just a ton of stuff happening in this space as more and more states have legalized, and there's opportunities in all facets of the kind of supply chain. Some deals are more interesting, have a more interesting equity story for us than others, but that doesn't mean that the other ones are without merit. And in some cases, we've done debt investments in the ones that we think are pretty solid credits, but we're not convinced that they're going to go to the moon. But there's an opportunity to earn a decent return on the debt in those cases, and so we've played both sides of the cap table in that way.
With debt, I wanted to ask you, is that more because you're more risk averse with that scenario, or are you more opportunistic with that? Most people take equity, taking debt, in historically speaking, you're wanting some collateral because you're not sure if it's going to work out. What's the advantages and strategy with equity versus debt?
Yeah, so on the debt deals, those are deals where we are not as convinced on the equity story, and maybe there's a disagreement or just too far of a gap on like what the valuation of the business should be on the equity.
You mean people don't have a $420 million valuation, like legitimately? That's weird.
Exactly. So, I mean, in those cases, like it can be hard to bridge that gap. And so it's like, okay, well, we could structure this as a debt deal with or without, some kind of equity warrants or a kicker on the back end. But if we're doing a debt investment that is non-dilutive and has no equity component to it, we're going, like, our investor base is expecting equity-like returns one way or the other, right? Obviously, there's more equity upside in an equity deal, right? If it goes to the moon, if it becomes the next, Canopy or GTI or whatever. But on the debt side, then we're still going to earn a double-digit, return on investment in IRR form, but that may be the preference for those operators, in that they think they're, when they do an equity round 12 months from now, using the growth that our capital helped provide for them, they'll be valued at 2 or 3 times the value that they are today, and that's really what they think their equity is worth, and therefore it makes sense to take the kind of interim financing from somebody like us.
Is there anywhere that you're looking forward to? Like, if is there a new state that you're excited about? Whether it's Virginia that's trying to make some moves right now, or Kentucky that has the least funded pension plan and will have to legalize eventually because they're dead broke. Are there any new states and or opportunities that you are excited about?
Yeah, Virginia's super interesting. I think Massachusetts, obviously, there's been a lot of attention paid there. Michigan, as I mentioned earlier. I mean, I think that, you know, I guess because I've spent more time in Michigan because of the diligence on that one deal, I know a lot more about it than I do about the makeup of the Virginia market, for instance. But, you know, the thing that I love about Michigan is that it's got double the population of Colorado
Mm,
and like 1/10 of the supply.
mm.
And so you just start doing the basic math on your, supply and demand curves, and you can see why there's just a lot of runway for growth in that state that's been largely overlooked. And part of it was the timing of when they legalized. They kind of came online with a legal structure like end of 2019, right around the time when all the capital markets kind of like got distracted and pulled out of cannabis. So there was a real lack of capital coming into the cannabis industry, circa Q4 2019, Q3 2019, and it just made it really hard for small startups in a state that often gets overlooked by a lot of investment community. Um, and so that's the one that I think we were most excited about. But yeah, there's super interesting stuff happening all across the country, and I think the states that figure it out first, and there's some states that are moving faster than others.
Mhm.
Obviously, Arizona just went from medical only to recreational. I think we're all expecting to see a lot of growth in that market just because of that. But the states that get it figured out first, and put a good, thoughtful regulatory framework in place, are gonna see outsized benefits, I think, and capital is going to go to where the best opportunities are from a regulatory framework standpoint. So that's, I think, my message to all the politicians in all the various states out there is like, you don't want to be the last one on this bus. Like there's benefits to being earlier rather than later.
Yeah, I think ultimately what's going to speak the most to them is dollars and cents. And to your point about Michigan, $104 million in the month of February isn't bad. Comparing that to Illinois, 121 million in total sales for the month. But Michigan's got 196% year over year sales growth compared to 343% in Illinois. But what I like about Illinois, what I like about Illinois is $110 per visit. California only has $65 per visit because they have delivery, and that's $65 is the minimum order for delivery.
Yeah.
Um, with Michigan having an average purchase of $78 per visit. Um,
Yep.
Either way, you're looking at these new states and you're like, my God, everyone wants the $411 million a month sales that California has, but not everyone is the fifth largest GDP in the world. But
Right.
nonetheless, you're looking at this and going, my God, even if a small little area like Saskatchewan can bring in 14.9 million, that's middle America. That's your Dakotas or your Wyoming or your,
Yep.
rural America is going to do a lot more than they would without it.
Yep. No, that's exactly right. And look, the average baskets and that kind of stuff will, there's be some, much bigger variations in the early days here because of the limited license nature of some, like Illinois, for instance.
Yeah.
Um, but a lot of that ought to get smoothed out over time. And, it's really kind of come down to the population in each state, and how readily available the retail kind of adult rec cannabis industry is. Like if you're not allowing more than 200 stores in the state of whatever state, then like yeah, of course you're going to have higher baskets and you're going to have less people with access to it because they're not going to be willing to drive an hour to go get it, right? And so but I think over time all these states that are kind of dipping their toe right now with limited license structures are going to see that okay, it doesn't lead to all these other negative externalities. It doesn't lead to children getting access to it and then using it as a gateway drug to other kind of heavy drugs. It doesn't cause lifetime addiction problem. It doesn't cause all these things that everybody's afraid of, and that will over time then say okay, we can issue more licenses, right? And so it'll take a little while for sure, but I think in the long run, like you're going to see more equilibrium on people if they want it, they're going to be able to get access to it.
Yeah. Yeah. Nobody's wasting their edibles on your kids during Halloween. Just newsflash. Doesn't happen.
No, definitely not.
So let's unpack the shit show that is Oklahoma.
Mm,
So comparing Oklahoma to Oregon has 3,500 licenses. Oklahoma has twice as many. Oregon had like the equivalent of 1 billion joints in excess. I think it was like 1 million pounds at some point, something stupid.
yeah,
Overproduction, right? So that's
yeah.
kind of what we're looking at. So when you go into a spot like Oklahoma, how do you invest in a place that's that overcrowded when potential federal legalization can make those state licenses irrelevant anyways? How do you look at a state like that and make a determination of whether or not that's investable?
Yeah, because of that oversaturation, we've not spent a lot of time trying to find a way to invest in that state. I think there's going to be a lot of consolidation. A lot of these, mom and pop licenses are going to go out of business. There's just not an easy way to support all of them simultaneously. They just can't make enough revenue and then the cost of dealing with the regulatory side of things, as we know in every state, it just adds a significant cost to the OpEx line. And that's not easy to deal with, especially with 280E. And so I can't imagine a lot of these license holders are making any money in that state. And so, maybe over time but I think there's just going to be, there needs to be some shakeout that happens first. And obviously Oregon has gone through some of that pain already. And I would expect similar kind of thing to happen in Oklahoma. And, maybe at that point in time, there's like potentially a roll-up opportunity or consolidation play to be had there. But yeah, it's not a market that we're eager to get involved in right now.
Well, let me show you what some crystal ball predictions have, and then get your take on that. So basically, I took a look at about 14 different publications that had their own idea of what a crystal ball prediction would look like in the cannabis space. And then after that, I think there was maybe about 45 data points within the dozen or so. So small data set, but then nonetheless, the crystal ball predictions have at 41% that legal or regulations are going to be the biggest thing for 2021. So I'm curious what your crystal ball prediction is for your investment attitude. Are you looking at, because last year price and profit was number 1 and it dropped to number 6. So if people are expecting demand to be the same at number 5 at 11%, or rare cannabinoids, hemp and CBD consolidation, you already mentioned, whether it's capitulation or agreed upon. I'm anticipating international expansion in Canada because they closed down all of these facilities to go back to Colombia that they already left because of the terroir and low labor rates. So investment surges at number 8 for predictions at 5.6%. Are you expecting to invest more this year? What is your crystal ball saying as it relates to kind of this small data set?
Yeah, so I mean, I agree with some of these things. And I mean, is this the question of like which are the most likely to happen this year? Is that kind of the idea?
Yeah, let's start with that.
I mean, I think that I guess I would be pleasantly surprised if federal legalization happens this year. Like I think the over under on that is probably 2 years down the road, not 1 year down the road. I think there's bigger fish to fry for the Biden administration, and I think the GOP is still not convinced on cannabis. At least the guys at the top of that kind of control the votes on that kind of stuff. And I just don't see it as something that's going to be in the top like 5 things that the Biden administration actually wants to get done in the first year. Obviously, there's pandemic related stuff, there's vaccine stuff, then there's stimulus stuff, then there's climate change and environmental stuff that is kind of top of mind for Biden. So I just think that cannabis has fallen down on the priority list, where pre-pandemic it would have been higher, and I think the first year would have been more reasonable expectations. But the pandemic has really thrown a wrench into that, in my opinion. In terms of like minor cannabinoids, I think that we're still a little ways off from public kind of focus on those. I do strongly believe in them, but I just feel like there's a lot of competition for headlines these days that mainstream media is not really picked up on this, and therefore most investors are not really keying in on this. But I do have some exposure to like the minor cannabinoid play in my portfolio. So, and then investment surges, like we've already seen it obviously in the public market. So I think number 8 on the list is already come true. It'll be interesting to see what happens. I think a lot of that investment surge is predicated on number 1, the legal expectations of legalization. And I do worry a little bit that if that doesn't come to pass, by the end of 2021, that there may be some retail investor kind of sell-off where they realize that it's not going to happen on the same timetable, or maybe Schumer tries and it fails, and then there's a sell-off a little bit. That may happen. So yeah, I don't know. I think, and I hope that the FDA finally issues full rulings on hemp and CBD. Certainly CBD as it relates to food and beverages as well. The interesting thing there is there are certain states that have their own version of the FDA that have already gone to the step of saying that CBD and food and bev is allowable in their state, up to maybe 25 milligrams or some limit. I know the state of Texas, shockingly enough, is one of those states that have taken that step. Colorado has taken that step. There's some legislation that's been introduced in California to that end. And there's some other states that are on that list too. So that it'll be interesting to see how that plays out, and whether that kind of forces the hand of the federal FDA to, go with the flow, so to speak.
I would definitely agree. There's a lot of FOMO out there, and especially if Mexico and or Israel legalizes becoming the 3rd and 4th country, there's going to be a lot more people, to your point about the investment surge coming into the markets that we saw, that drove up all kinds of equities. Tilray's been going crazy. They had a 50% correction yesterday. Just
Yeah,
wow.
I mean, from a personal point of view, we're primarily focused on the private side, and we work with private accredited investors, and so I hope that the kind of public interest in this drives more capital to search out firms like ours on the private side that there's no, basically it's the amount of capital that we have to deploy is relatively small compared to the opportunity sets that we're seeing. And on the deals that we've done, we could have deployed 2, 3, sometimes 4 times as much capital as we did. Just the challenge is maintaining a balanced portfolio, and not having the ability to write as big of a check as we might like. But so we're hopeful that the family offices finally start to kind of see the light and recognize that this industry is a very interesting investment thesis in and of itself, but also a fairly good hedge or counterbalance to whatever positions they might have in the broader public equity markets, because it's a fairly uncorrelated industry. Like the growth in cannabis is not really predicated on how any of the other industrial sectors perform, and it's proven itself to be countercyclical and grew quite healthy in a recessionary environment, and will continue to do so. I think the recessionary environment, if anything, will just cause more states to legalize more quickly, because they'll be searching for ways to increase tax revenue and jobs in their home state. And so to me, that just advances the wave of legalization on a state by state basis, regardless of what the feds do or don't do in Washington D.C. So that's been my perspective, and what I talk to the family offices that we work with about is hey, like this industry is only going up and to the right, and it's completely uncorrelated with your other investments, and it just makes sense from a portfolio balance standpoint that you probably want to have some exposure here, right? And it's up to you to decide what percent of your portfolio you want to do that with, but it's hard to make a case against the industry at this point.
I'm curious if you are anticipating yourself being involved in a consolidation, as you private equity. You're one of the last to have decent valuations. So up in Canada, publicly traded companies are speculation and greed has pushed those companies way beyond bubble territory, making the U.S. one of the golden opportunities to get decent valuations. So I'm curious if stupid money is going to be coming in and rolling up all of these companies. Do you anticipate being a part of that, or do you have an exit strategy?
Well, I mean, certainly that's an exit strategy for a lot of our domestic, leaf touching assets. Is they can be a target acquisition for a Canadian public or a US MSO that is traded on the Canadian stock exchange, that has currency in the form of their own stock that is probably much higher priced than whatever multiple they'd be paying for the US asset. So I mean, if they're trading at 20 times revenues on the public market, they can acquire something for 10 times revenues in the US, and it's highly accretive for them. And the private valuations are generally a lot lower than 10x revenue. So that's the multiple arbitrage that we see in the marketplace, and that's why we're very comfortable focusing in the US market, because there's lower valuations, but ultimately it's a much bigger kind of market size than Canada, for instance. And that's where all these Canadian companies are being like the Canadian publics that are valued the most right now are the ones with the most inroads into the US. And there's a reason for that, because the market here is so much better and bigger than the Canadian market. And so how does a Canadian public get more higher price on their stock? They go acquire more US assets, right? Or try and build it yourself, but obviously that's proven to be quite difficult because of all the regulations. So that's a very easy kind of exit opportunity that I see for the US based assets.
I think I would add also maybe automation could bring down that as well. I've been anticipating vertical integrated agriculture to hit cannabis. It's slowly developing to have robotic assistance and artificial intelligence to be able to, for example, look at a leaf, and if the leaf is tacoing, you can see that that's either environmental effects like too much of a fan and or a nutrient deficiency. Um, with Canada selling $6 a gram and other US based competitors being able to do it for a fraction of that cost, as low as like $1.30 a gram, are the Canadian counterparts going to have to revert to vertical integrated agriculture and utilizing artificial intelligence to reduce their labor count and improve yields and price
Yeah.
points?
Yeah, I mean, I totally agree with you. I mean, the cost of production in Canada is higher than it is in the US. And obviously it's higher in the US than it is in some place like Colombia. But, ultimately that's going to drive the Canadian cultivation side of the equation to have to consolidate. They're going to have to utilize big ag tactics and toolkits. And I would expect that would definitely involve the latest cultivation technology, tools, I guess, for lack of a better word. So I think there's definitely a very, and I think they've already learned some of that they need to consolidate. They need to do it on a bigger scale. They need to leverage their operating leverage and corporate overhead. And at the end of the day, it's obviously a climate issue. I mean, there's a reason why, we're not in the US generally importing that much produce from Canada, right? I mean, obviously maple syrup is a big import from Canada, but we're not getting fruits and vegetables really from Canada. And that's because we have a much easier time producing them here in the United States. And so I think that is definitely going to be a challenge for them. And I also see it eventually as a challenge for a lot of the northern and East Coast states in the U.S. that are building cultivation assets that they have to right now because they can't transport cannabis across state lines. But again, in the long run, most of the produce in the country comes from the West Coast in places like California and the South, right? And so the states that get more sunshine, really, it's not that complicated. But I think indoor cultivation and greenhouse cultivation can coexist. But I think obviously the least expensive outdoor cannabis is ultimately going to come from those states that have the best kind of natural growing conditions for farms. And so that once there's a long-term federal kind of structure where you can cross state lines with product, I think the outdoor cultivation in those states will kind of take precedence, and they'll always enjoy a lower cost of operating.
Yeah, which in my opinion does not include you, Florida. I'm talking to you. Are you invested at all in Puerto Rico? Speaking of the Southeast, Puerto Rico being the only place in the world as an American that you can go and not pay federal income tax, utilizing Act 20. So for CBD companies, I've said maybe up to 85% will fail unless they have an entity in Puerto Rico. What's your take on that? Once cross-border opens up, do you think there will be a flood of people going into Puerto Rico, even though they're not doing that in other sectors?
I don't know. I mean, it's interesting to think about. I mean, that is the $1 million question is if what is there's obviously something that's keeping most kind of whatever mainstream industries from making Puerto Rico their core operational hub, just to take advantage of the tax treatment. So I haven't looked into the details of Puerto Rico's tax regime, but it'd certainly be interesting to ask that question and try and understand what are the market forces that make it attractive, but also might make it less attractive in some other ways. But yeah, I mean, it ultimately that's going to rely on some kind of federal framework, and it may take a while to get there. And that's the thing. Like I see the most likely federal legalization framework to be something like the States Act, which is going to just kind of leave it to each state to decide their own course of legalization, and that won't create an automatic ability to just cross state lines. And so maybe certain states will try and set up almost like an interstate trade agreement kind of thing, but those take time to figure out. And some states are going to want to be more protectionist with their, I mean, every politician in each state is all about how do we build small businesses in our state and create tax revenue and jobs. And if you open up the borders, then does that risk the jobs that we just created, and all that kind of stuff. And so it'll be interesting to see how it plays out. I mean, that's the one thing that's for certain, is that this industry is going to be fascinating just intellectually to watch how it all unfolds over the next 5-10 years.
I know you're waiting for it, Jeff, but don't hold your breath for infused potatoes out of Idaho. I don't think that's going to come anytime soon.
Oh, but what about the French fries?
That'll be another thing, because it'll be the oil that we're dipping that in. But
that's right.
Podcast for another day. I want to ask you about big pharma. So they're kind of getting into the game. There was a historical merger with GW Pharma. Jazz Pharmaceuticals bought them out. A lot of people are moving from big pharma to CBD and cannabis, maybe as a more holistic approach to taking a pill. Um, Allopathic medicine is like duct tape. We want to peel the onion back and get to the root cause, something that doctors have no idea what that is. So, um, curious about that whole play and what that does to the industry, that it's now intertwined.
Yeah, I mean, look, I see it as a very positive step for the industry, especially as it relates to the pharmaceutical and like medical side of things and the health and wellness side of the plant. I have long been a believer in the medical attributes of cannabis derivatives. Obviously, THC and CBD are the two most well-known molecules, or cannabinoids, but there's 100 other cannabinoids in the plant that are potentially just as, if not more, beneficial for certain types of ailments. And we're only scratching the surface from a science and research side of what those um, what those cannabinoids might be able to do for us. But there's a lot of interesting research coming out of Canada and Israel, places that have federally legalized it, so that there's more studies available there. And so, more studies now being done now that hemp has been legalized here in the States. And so, um, I think it shows that big pharma, sees real potential here on the cannabinoid, and how to involve cannabinoids maybe with their existing pharmaceutical compounds in a way to enhance them. Um, and I think that that can only be a good thing. I think there's lots of potential for the medical side of this, and it takes companies with a lot of research dollars in their bank account to be able to really kind of pursue that kind of stuff. And so, hopefully this just portends more interest in the sector. But um, yeah, so I think it's a good step. I can't really comment on the price paid and all that kind of stuff. I think GW was obviously a pioneer, but at the end of the day, I'm pretty sure their Epidiolex was just CBD isolate, which is fine. But like there's a whole theory out there about the whole plant and the entourage effect, and I tend to subscribe to those theories that there's benefits to having multiple types of cannabinoids kind of enhancing each other's work, if you will. But hey, that's the first step, right? And getting people to understand that at least one molecule has merit. Now they're open to the next one, right? And so I think if all the other big pharma companies hadn't been paying attention, I think they're now having to pay more attention.
Yeah, to your point on full spectrum versus an isolate, Marinol is not that great. A friend of mine that's passed away from multiple sclerosis that inspired me to leave my job and get into cannabis hated Marinol, and I don't think Epidiolex is probably any better as relative compared to the plant and having a full plant extract. So
Yeah.
I think ultimately there's also a lot of people who just don't trust big pharma. And a lot of the cannabis consumer base, they don't trust big pharma. They also don't trust Wall Street for some similar reasons. So GameStop, AMC, Wall Street, a lot going down with that, and really kind of a realization that the market is not designed to help the little guy. So
Right.
as trades went on and brokerage firms stopped allowing for trades to let the hedge funds catch up, what's that going to do to the cannabis industry? What do you, I know you're private more than public, but
Yeah.
what's your take on that whole scenario, and how it's going to trickle down and affect other sectors like cannabis?
Yeah. Well, I mean, I think Wall Street Bets on the Reddit forums, recently picked up a couple of cannabis stocks and started, promoting them. And we've seen some runs in certain cannabis stocks over the last couple of weeks as a result of that. So, I mean, it's already had an effect in that way. I think, obviously, your broader point is about how, look, GameStop was a big run up, but then there was a big fall. And, it was primarily the individual retail investors, the little guys who were left holding the bag. And these hedge funds, they have a ton of money, and they're super smart. They have algorithms working on for them. They have high frequency trading tools that they can employ. So, you know, I mean, that's part of the gamesmanship of Robinhood. Is Robinhood is free for you and me to go on there and invest, but that's because they sell that trading data to the high frequency trading firms like Citadel and others, and those guys get to front run
Mhm.
basically, right? And they get to say, oh, Jeff's willing to buy this stock for $50. I can buy it for $49.80 and sell it to him for 50 and make 20 cents. But I do that, hundreds of thousands of times, and then it's basically free. It's riskless money, for them. And so that's who the customers really are of Robinhood. They're the big Wall Street, giants. And so, Robinhood markets itself as like I mean, it's called Robinhood. It's all about, taking from the rich and giving to the poor, right? Like, I mean, they have a very good marketing play. But like, if like, I guess the thing that I always believe, if you're not paying for the product, you are the product.
Yeah.
And whoever's paying them is really the customer that they care about. I mean, think about Instagram and Facebook and all that, right? Like, they're pushing ads on you. You're the product. Your eyeballs, your attention span on those social media apps, that's the product that is being sold to advertisers. So, and the data around it is being sold to other companies that are like maybe big CPG companies and things like that want to study, consumer behavior trends. But yeah, I mean, I think that's the challenge is that's just how the world, like, it's just kind of how it's all set up without better laws or regulations to kind of stop that from happening. Like, people just need to understand that's the game, that's the system. So either vote for, politicians who, will try and change that, or, just don't, just know that you're the product at the end of the day. But back to your broader point about hedge funds, like, I think, hopefully it brings more kind of institutional investor interest into the cannabis space, because that's been lacking. And so, the more institutions that kind of get wise to it, I think, the more mainstream it gets in people's minds about the industry, the more legitimized the industry gets, the more capital eventually flows into that industry, both on a private and a public basis. So, you know, hopefully in the long run, that's a good thing.
So to your point about using, AI and technology, is the next Robinhood 2.0 effect bringing big Wall Street tech to the little guy? Will it be algorithmic trading and AI and machine learning for the little guy to be able to actually invest at the same scale? What is the level playing field, and how to compete against that?
Well, so it's interesting because there are big, Wall Street firms that have been lobbying to to Congress basically to open up their investment community to the retail investor. Right now, you have to be an accredited investor to invest in a hedge fund or a private equity fund, or a venture capital fund for that matter. And so, that has very, strict kind of limits on, like, you have to make at least, a six-figure salary, depends if you're single or married, and or how many, like having $1 million of liquid assets and all this stuff. And so it really prevents the little guy from participating in these asset classes. And but so the BlackRocks of the world and KKRs of the world would love to be able to pull that type of capital into their capital base, investor base. But at the end of the day, like, those investors are probably going to have the least visibility into how all that stuff works. But at the same time, it gets them access to an asset class they haven't had access to previously. And so, there's two sides of that coin, but there is, some lobbying going on right now to open up, those investment opportunities to, like, the 401k plans of the average Joe. And I think if as long as the 401k administrator and those folks have, like, the right fiduciary interests of their constituents in mind, and to help be the governor of that, then I think that could potentially work. But it's going to bring, like, $1 trillion into the investment community for private equity hedge fund. I mean, it's going to be momentous if that happens. But in some ways, that helps level the playing field, as you said. So.
Yeah.
Interesting.
That would be the idea. Um, is there anything we missed? Anything that you want to talk about at this point before we wrap this up?
No, I mean, I think we covered it. I think, you know, we've been very focused in this space, both the hemp and the cannabis side, for a few years now, and you know, I guess it's been hard during the pandemic to kind of meet with other family offices and the like. But
Mhm.
you know, that's what we're really hoping for in the long run here, or in the short run, is to start having more meetings with those folks and kind of telling the story about, you know, why cannabis, and you know, why the private side is attractive, and you know, having both equity and debt opportunities, you know, could be a very, very good tool for their portfolio kind of allocation strategies. And so that's really where our focus is at in the first half of 2021, is to start doing more investor meetings. So hopefully the pandemic cooperates.
Yeah, I think a lot more people are available, especially with Zoom. You can do that remotely. For those, private wealth managers, family offices, and the like, those that are interested, anybody that watches the Talking Hedge, they want to get a hold of you, Jeff. How do they do that?
Yeah, website is bravoscap.com, bravoscap.com. My email is jeff@bravoscap.com, and you can find me on LinkedIn.
Yeah, and we'll have those links in the show notes in the description as well. So with that, I think I want to wrap this up. I want to thank my guests, Jeff Kendig. He is the managing partner with Bravos Capital. Jeff, thanks for being on the Talking Hedge.
My pleasure. Thank you very much.
Yep. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.